Looks like we're live streamed. Okay, well let's go. We've got a pretty full a night, so let's try to we're going to try to keep on time as best as we can. We've got a lot of information to cover, a lot of insights, and a lot of interesting discussion on the horizon. So I'll introduce myself briefly. My name is Rick Marchese. I'm a professor in the finance department at ESSEC Business School's campus here in Singapore. I teach undergraduate and graduate students in the MIF program. Also tonight with us, we have two alumni. We have Raphael Lambert. He is a junior portfolio manager at Amundi in Hong Kong. He is a MIF, ESSEC MIF graduate from the class of 21. We also have Fabian Meyer. I mentioned Raphael's in Hong Kong. Fabian Meyer, he's with Lazard in their investment banking group here in Singapore. He's a recent graduate from 2023. So we'll hear from them later on in the presentation. And we also have Ben Scruffins, who runs eFinancialCareers in Asia-Pacific. And what I will do is, Ben, since you're going to speak first, I'll let you add on to that, onto your intro. Fabian and Raphael, when we get to the panel discussion, I'll give you a chance to add some more color to your background. But I'm just going to hand it over to Ben right now.
Fantastic. Well, thank you, Rick. I'm absolutely delighted that you've invited me along this evening, hopefully to give some quality job market insight for financial services in APAC. So I thought I'd start with a bit of an introduction, and don't worry, I'm not going to read through all of this at all. And here's the thing, that the material will be circulated and made available after the session. But a bit of background, I've actually been with eFinancialCareers now for 20 years. I did the first 3 years in the UK when eFinancialCareers was very much in startup mode. And then I moved out to Singapore in 2007 to get our Asia-Pacific operation going. And I'm still here. So fundamentally, I have 20 years APAC financial services online recruitment experience, and hopefully, therefore, I'm well positioned to provide a bit of insight. Here's the agenda for today. I'm not going to read through this either, but we're going to take about sort of 25 minutes just to get through this. And we've got some really interesting points. We're also going to be talking about compensation towards the end as well. Now, before I get into any of that, I thought it'd be good just to explain a little bit about who eFinancialCareers is, because some of you might not be aware of who we are, what we do. So essentially, we are widely regarded as the leading financial services and technology career platform. We are a global business. We're present in 19 markets around the world, whereby we have a real capital markets focus. And within there, focus on investment banking, asset management, securities, and in more recent years, fintech as well. One of the things that really differentiates us as a platform is the fact that we are a news-driven site. So we have a team of journalists around the world that are contributing towards eFinancialCareers pretty much on a daily basis to talk about who's hiring, who's not hiring, or who's firing, who's paying bonuses, who's not paying bonuses, where the exciting new opportunities within financial services are from a career perspective too. So if you're not familiar with eFinancialCareers at all, it is 100% free of charge for candidates. So do go and check us out at eFinancialCareers.sg. As I mentioned, we do provide a lot of news. We also do a lot of insight as well. I just wanted to show this very quickly because ultimately this is going to form the basis of this presentation. We've done an in-depth piece on fintech. We've done another in-depth piece on bonuses and job security, and I'm going to finish on that piece. There's also some other pieces here on diversity, equity, and inclusion. And then lastly, there's broader hiring trends as well that we're seeing, and we're going to touch on that too as part of this presentation. Okay, so I'm going to start by giving a high-level view of the main Asia financial hubs, and I do stress it is going to be a high level, but hopefully this sets the scene for the discussion a little bit later. And I'm going to start with Singapore. So Singapore is widely regarded as a global financial hub. It's got a diverse range of organisations, a diverse range of services that are available here. And it's very much got a very strong reputation for being a private banking hub, wealth management and private banking hub. It's also got a reputation of having a strong FX market. In fact, it's the third biggest in the world, behind New York and London. And it actually employs around about 200,000 financial services professionals. Financial services as a whole makes up around about 60% of Singapore's GDP. It's significant, I think it's fair to say, and therefore we think that Singapore will remain to be a leading global player within financial services. Now, just quickly, again, very high level, this is just kind of the makeup of the sell side and the buy side. It shows here that we have 6 local banks. This is actually put out by the Monetary Authority of Singapore, but it shows that there's 6 local banks, but then 119 international institutions that are also based here. And then more recently as well, we've seen the emergence of the digital banks as well. On the buy side, there are 2 very significant sovereign wealth funds in GIC and Temasek Holdings. But if you just look at this chart here, it just really does illustrate the volume of private wealth management organizations that are registered and operate in Singapore. In addition to this, there's also 300 hedge funds that are operating here. And again, it just kind of provides this very diverse financial services ecosystem that we have here. And I just wanted to provide an example of some of the organizations that are currently looking for talent. I think it's widely documented that we're currently in a bear market. But look, it doesn't matter. Some of these organizations are still looking for, kind of for the right talent. And we have a diverse range of organizations that are here. So whether it's from an insurer or whether it's from Airwallex, kind of a fintech, information providers, some of the main banks as well. I think the point here is that the ecosystem is still very much thriving, and there's opportunities that are available. Next, I want to spend a little bit of time talking about Hong Kong. So Hong Kong, very much is a true global financial center, often viewed as the China gateway with a diverse range of financial services available to. It's often viewed as a deal-making hub of the region. In fact, in 2023, it was ranked 5th in global IPO rankings. Now, IPOs were actually depressed in 2023, but they're set to rebound in 2024. There's a real focus on fintech and innovation, both in Hong Kong and Singapore. But for Hong Kong, there's around about 260,000 financial services professionals that are based there. And financial services as a whole makes up around about 21% of Hong Kong's overall GDP. And lastly, I just wanted to touch on Shanghai as well, because Shanghai is a really interesting center. We've seen exponential growth in Shanghai over the last 15 to 20 years. There's now an estimated 400,000 professionals that actually work in Shanghai. And the Chinese government actually announced around about 2010 that they wanted to promote Shanghai as one of the world's leading financial centers by 2025, and they've really kind of made some giant strides along the way to get there. There's a really strong sell side and buy side mix. Obviously, there's leading international players that are there, but there's also some really strong local players as well. We have here a couple that I've just highlighted in terms of the CITIC Group, which actually employ around about 60,000 financial services professionals in mainland China alone. And CICC, one of the leading investment banks there, that employ around about 14,000 financial services professionals. Shanghai itself is on the forefront of the China economic reform. In 2013, as part of the growth strategy, they actually launched the free trade zone. And essentially what this means is liberalized capital flows, more open and flexible financial environment, speed in terms of cross-border settlements, and reduction in terms of FX control as well. This allowed them to promote trade and ultimately create as well a regulatory sandbox to allow organizations to really operate outside of the broader Chinese regulatory framework. And of course, in turn, what this has done is really attract foreign investment, and that's really fueled that growth that we've seen over the last 15 to 20 years in Shanghai. And from a GDP perspective, again, it's significant. It's 18%. Financial services is 18% of Shanghai's overall GDP. So next, I just want to talk about some of the roles and skills in demand. And I think the point I'd like to make here is that I don't think this is specific to any sector. Financial services is very much a global industry. So some of the kind of trends that we see in the region here are kind of mirrored in Europe and in the US. I'm not going to go through here, kind of every single skill. I'm just going to kind of speak to a few, but we're kind of seeing a lot of these in abundance now. Financial modeling and valuation remains to be absolutely key. I think tech is a really interesting one. We actually hosted a roundtable of senior talent acquisition leaders in Hong Kong like last year. And one of the lead investment banks was saying that, tech recruitment actually now makes up still more than 50% of their overall recruitment mix. So there's a lot of demand still within the tech space, whereby candidates are still very much in short supply. Another area here might be risk management skills as well. We've seen recently that there has been a real push for risk data aggregation as the regulators have seen. Kind of many organizations, many geographies are behind in this in risk management aggregation, and this, of course, is fueling the demand for people in this space. There's some other areas, of course, that are in here. There'll be no surprise. Data science is absolutely massive. I don't think this is prevalent just in financial services. I think this is cross-industry, that these skills are very much in demand, especially following the emergence of AI. We're also seeing continued investment year on year in cybersecurity, as cyber criminals become more sophisticated, and because again we're seeing more investment into cybersecurity, that again it fuels the demand for professionals in this space. Exactly the same with the ESG. That won't come as a surprise to absolutely anybody at all. There's real investor demand here for investments to be compliant, and there's regulatory pressure as well. And again, that's really fueling the demand for people to operate in this space. So I just wanted to give a bit of an example of some of the organizations that are hiring today. Okay, and so just to kind of go through these, and I'm not going to read through all of these job descriptions, but I think there are some really interesting points in here. The ESG, which is a relatively new sector here, this is SMBC looking for a risk analyst. And I think this, for me, is when we look at the requirements, is really interesting because it's so broad, and it's looking for someone with a degree, preferably finance, accounting, sustainability, or risk management, and at least 1 year of relevant working experience in financial institutions. So it's a pretty broad requirement. The other interesting part of if we look in the middle here of Goldman Sachs, who are currently looking for people, this is a front office commodities trader role. And again, if you kind of scroll down the qualifications, one of the things that we're starting to see that's more prevalent is asking candidates to be fully conversant with Python's popular data science and machine learning libraries. And this is something that we're seeing on a consistent level, that there's more and more tech and more data skills that have been asked of front office roles. It's not just necessarily prevalent in broader tech. I then wanted to call out Temasek as well. So again, one of the main sovereign wealth funds that are here. This is a mid-management role. It's an AVP role, so slightly more senior. And I think what's interesting about this job description when we look through is that there's a real call out on the soft skills. And this is another trend that we're seeing in the space is that more and more organizations really care about soft skills, and especially within fintech. And I'll go into this in a little bit more detail in just a moment. But my advice and my recommendation to anyone that's looking to get into financial services is not to minimize the importance of soft skills in the interview process. It is becoming more and more prevalent. So with that in mind, I want to talk about the rise of fintech. So it's a significant industry. And this is some research that's been done by ARC Research Consulting. We know today that the industry is worth around about $260 billion, but it's forecasted to be $851 billion by the year 2030. So it's got massive forecasted growth of 18.5% year on year. And that's going to be creating demand for professionals across kind of the listed technologies and services here. What I've done is list a number of Singapore-based fintechs that are currently looking for talent. Now, I think it's fair to say that fintech as a whole has gone through a massive period of recalibration over the last sort of 12 or 18 months. There's been less liquidity that's been flowing through fintech, and that arguably has limited some opportunities and some organizations. But there's no question about it, that fintech is here to stay, and this level of growth is unquestionably going to provide some real demand in these areas that are listed here. So expect to see opportunities in this space. Fintech in Singapore and Hong Kong is massive. They've got really strong government support because ultimately, the governments are really trying to tap into this growth trajectory. So there's a real strong focus on talent in both Hong Kong and Singapore in the fintech space. Predominantly because again, both centres are positioned really well. There's a really strong technology infrastructure. The geographical positions are really good. So there's everything there for fintechs ultimately to thrive in this region, and that's what we're seeing. Every year now there's the Singapore FinTech Festival, which is always a very interesting spectacle. It's now the biggest fintech conference in the world. There's over 600 fintechs that exhibit there, and there's over 60,000 different participants. And just to kind of be in there and be amongst it really kind of shows just how much the industry is thriving in Singapore and how much opportunity there is. As I mentioned before, there's a real emphasis on the soft skills, and quite often we're talking to fintechs whereby they're saying to us, look, from a hard skill perspective, during the recruitment process, we can quite often we will compromise on the level of hard skills that a candidate might have, because ultimately they're quite often they're trainable. But when it comes to soft skills, they're the non-negotiables. Okay, we've got to make sure that the people coming in are ultimately they're good at collaborating. They're good at communicating. They're real team players, because ultimately, if they make a bad hire, that can ultimately have catastrophic effects on the business. So there's real focus on this piece. So again, if you're interested in pursuing a career in fintech, don't minimize the importance of the soft skills. And as I mentioned before, this is becoming more prevalent as well in traditional financial services. It is important. So why is fintech so interesting, so to speak? So we actually did a survey whereby we surveyed 2,000 fintech. I can't remember, or 2,000 professionals working in fintech, and they actually state that 47% came from traditional financial services, whereby 26% came from technology, which we felt was interesting. Now, there's a number of reasons for this that have been stated: flat structures, career advancement, but of course, compensation as well is quite interesting. And here's the thing, right? So when we surveyed professionals working in this space, and we asked them to state kind of which organizations by size that we were working at, and also the makeup of the compensation, on average, RSUs across the board is 33% of salary. And again, this is qualitative data. There was 2,000 respondents in here, which is really interesting. So there's a lot of interest in fintech. The other point here as well is what we hear from traditional traditional financial services clients is that candidates that go get that experience and work for a fintech and then actually pivot back to traditional financial services, they're the golden egg. They're the candidates that they really want. They're the candidates that they really desire, that are really in demand, so to speak. So that leads me nicely into compensation. And this was another survey that we conducted in late 2023. And again, I'm going to keep this super high level, but I just want to give everybody an indication of what pay is like in the industry. So this was, as I said, 2,000 financial services professionals that responded to our survey in November of last year. So this is kind of gearing up for bonus time and reflecting essentially on 2023 performance. There's a wide variety of questions, but we're going to focus on salary and bonus expectations as well. just in some of the highlights, the most optimistic professionals in the industry work in hedge funds. Average hedge fund respondent expected bonuses to be up by 30%, which is massive. And we believe that this is a real strong reflection on performance. We were talking to Citadel late last year, who it's a multi-strategy fund, up 13% in October 2023. They've been enjoying some good times. And therefore, candidates are expecting that to be reflected in bonuses. Then the last point on here is, there is vigorous competition for talent in this space, and it's used as quite strong retention strategy. So that's the highlights. That's the headlines. But what I wanted to do is just to almost, well, this is the penultimate slide, just kind of finish with this. Now, I'm not going to go through every data point, but essentially what we did is that we asked respondents to fill in their 2022 salary, their bonus, and obviously we calculated their total compensation, and then compare that to really what they're expecting in 2023. Which again is pretty interesting. But I think this should just give everybody a sense check of kind of what pay is like in the industry. This is, as I say, it's real data. It's US dollars, by the way. It's not Singapore dollars. It's not Hong Kong dollars. It's very much US dollars. And again, we're not going to go through every data point, but it was just to give everyone a flavour of where we are from a pay perspective in 2023 versus expectations in 2024. So that's it really in terms of the deck. We just to summarize, Singapore, Hong Kong, and Shanghai are diverse hubs and they're thriving. We might be in a bear market right now, but there's many organizations that are looking for talent in this space. IPOs are set to recover, we hope, in 2024 and 2025. That will fuel the demand for people. There are key skills that are in demand, whereby candidates are also in very short supply, which is interesting. I've also highlighted the global fintech emergence as well, and the demand for people in that space. There's obviously a real emphasis on the soft skills, and then lastly, it's clearly a well-paid industry. Yeah, that's the end of my deck.
Great, thanks, Ben. That was very insightful. And so what we're going to do now is we're going to open it up to a panel discussion. We're going to hear from Fabian and Raphael. Ben's going to stay with us. And also, if you have any questions, I mean, this panel and this webinar is for you. So we're not going to wait to the end for Q&A. So if you have a question, you can raise your hand. You can send me something through the chat. It'll be my responsibility to keep up with that, and I'll bring that question to the panel's attention. But what I'd like to do now is open it up. Fabian and Raphael, I'd like you to reintroduce yourself, maybe give a little bit more color than I did right at the beginning. We have more people online now. So Raphael, why don't you start? Give a
Sure.
elevator pitch on yourself.
Yeah. Thanks, Rick, and thanks, Ben, for the presentation. It was indeed very insightful. So just to provide a bit more background about myself, as Rick mentioned at the beginning, I graduated from the ESSEC MIF program in 2021. Before ESSEC, I did my undergraduate studies at the University of Chicago, where I majored in economics. After graduating from ESSEC, I joined Amundi Asset Management in Singapore as an investment analyst. And during my time there, my focus was really on Asian fixed income. After 2 years in Singapore, so last year, I relocated to Hong Kong, where I'm currently a junior portfolio manager within the multi-asset team. In my day-to-day role, I'm involved in various aspects of portfolio management. So whether it be portfolio construction, monitoring, implementation of trades. And also my role includes the oversight of areas such as asset allocation, bond selection, as well as performance and risk management. And I also continue to provide support on Asian investments, trade idea generation, especially within Asian fixed income.
Okay, great. Fabian?
Yes, thanks, Rick. So nice to meet you all. So for a quick background, I'm from the south of France, from a small city, not more than 30,000 people. Decided to go study finance in Bocconi for 3 years, a bachelor in finance, and straight away decided to go study at ESSEC in Singapore, where I did the 2-year master in finance. During that time, we had a lot of chances and opportunities to do internships, and I've worked in two venture capital investment firms for 9 months in total, and that was only a path to get to the current position I am currently occupying at Lazard as an private capital advisory analyst. So, as a brief overview of my role, we are more doing something more similar to what you would traditionally know as mergers and acquisitions, where we are helping private equity firms exit some assets via the secondary market by selling a stake in their ownership of some companies. So I'm currently an analyst too, and I've been with Lazard for 2 years so far.
Okay, great. Well, thanks for that very much. We actually have quite a few questions, so I thought maybe we can address those first. So let me ask you to Fabian and Raphael, and to the extent that Ben may know, is ESSEC considered a target school for investment banks and asset management firms in Singapore? What was your experience? Maybe Fabian, you can address that, and then I can also give my thoughts on it.
Yeah, sure. So Singapore is a big financial hub, as Ben has pointed out very clearly in his introduction. So there are plenty of opportunities to find a job in finance, be it in investment banking and asset management. And there are three to four key universities providing those talents. You have, of course, the three universities, Singapore-based universities, and as well, ESSEC has been increasingly, at least at Lazard, we've been increasingly reviewing candidates from ESSEC. I've heard a few other colleagues from other firms reviewing and finding ESSEC candidates competitive, much more competitive than some of those three other universities, especially because there might be some more cultural background where you will find a lot of cultural diversity in the ESSEC Master in Finance, Master in Management batches. That's what we've been observing recently. And Rick, feel free to add on.
Yeah, I'll say a quick comment here based on my observation. So I would say, is ESSEC a target school for investment banks and asset management firms? Absolutely, on a global scale. If you want to work for a Singaporean bank, one of the three large banks that are based in Singapore, probably ESSEC isn't where you would want to spend your time. You would want to go to one of the local top tier universities. The banks that come to look for ESSEC students typically are global banks, right? Because the ESSEC degree, it's global. The students are global. The degree has what we say in the US, it travels well. So if you go to North America, if you go to Europe and Asia, people recognize the degree. It's the degree and the program. It's internationally ranked with the Financial Times. So short answer to your question is yes. Raphael, do you have any thoughts on your experience or?
Yeah, sure. So just to add on some brief comments, I think absolutely I agree with the sentiment that was shared. So If we're looking purely at Singapore and we're looking at the local companies, of course, you have the three main universities, which are very competitive already. But if we look more globally, if we look at French companies, if we look at US companies, ESSEC certainly does have a very strong reputation. During my experience at the MIF program, I was fortunate to have many professionals, not only from Singaporean companies but from international companies, come to the class to share their insights on the industry and to network with students. And certainly, my observation was that they have a very high regard of ESSEC students. So certainly, it's a sentiment that I share, that if we take a more global view, ESSEC certainly does have quite a strong reputation.
Okay, great. Ben, question on compensation. Starting off in the industry as an analyst, either asset management or investment banking, do you have a sense of what a master's in finance, the edge that it gives you versus someone trying to get into the industry, coming straight out of undergraduate? Both your competitiveness for landing a job and also compensation.
Yes, I think I mean the short answer there is it definitely offers competitive edge. I don't think that is in question at all. One thing I would say around bonuses and bonus expectations for 2024 is that actually, again, kind of based on the surveys that we ran, is that the entry level candidates that got the masters, but we're actually expecting larger bonuses in 2024, mainly because kind of the bonus pool have been so limited in 2023 based on 22 performance. Is one thing that we're seeing. So I mean that is just panning out at the moment. So we don't have any kind of sort of qualitative data that we can share, but certainly the expectation at this stage is that kind of entry level bonuses are going to be significantly up year on year.
Okay, all right, good. And question to Fabian and Raphael: what track did you follow when you were at ESSEC? Raphael, maybe you can start.
Yeah, sure. So for me, I took the corporate finance track. So during my time there were three different tracks on offer. There was corporate finance, global markets, as well as fintech. So even though I did corporate finance, my current role is actually more global markets focused. So of course, choosing the track is important, but I would highlight that no matter which track you do take, there are some translatable skills, some of the core courses as well in the tracks are shared. So I think this is a point which I would like to highlight.
What about you, Fabian?
Yeah, I would add on that. That's a key point. I did the corporate finance track, but you can easily choose electives from the fintech and global markets track. That's something where you have flexibility. And I took the corporate finance track and did actually take some of the global markets classes as well.
Yeah, the other thing too, I think it's important to know that the fintech track, it's something that's only offered at the Singapore campus through the ESSEC program. So if it's something that you're interested in, that track is offered on the Singapore campus only and not in the main campus in Cergy. So let's talk about, so Raphael, you've been in Singapore and Hong Kong. Fabian, you started in Singapore. Ben, you see kind of what's happening across the region. What are the outlooks for these markets? Do you see them continuing on the same trajectory that they've traditionally experienced? Ben, you talked about Shanghai growing. Is that growth going to come in tandem with the other two major markets, or is it going to come at the expense of, say, Singapore and Hong Kong? It's, by the way, most people probably know there's a friendly rivalry between these markets in terms of bragging rights and deal flow and AUM. So maybe Ben, what you've got the umbrella perspective. So what are you seeing and what do you think?
Yeah, sure. So look, I mean, we're seeing right now kind of consistent conditions in all three of those centers. They're very much in bear market state. But equally, there is opportunity. There's still a lot of hiring that's going on. Kind of skills that still very much in demand. Um, I think therefore, I think it's really kind of hard to say if one is going to recover quicker than another. Maybe not. I think kind of potentially what we're seeing now is more of a global trend, and therefore I think kind of these centers are a whole absolutely going to thrive. They're here to stay. There is no question about that. But equally, I think it's if you think about this kind of from a regional perspective, it's not just about Shanghai, it's not just about Hong Kong, it's not just about Singapore. We're really starting to see some really interesting areas, and especially if we consider the Middle East as well. So I've just described kind of the three centers I've been through has been in the bear market. But if we think about the Middle East and we think about Dubai and we think about Saudi, I mean, at the moment they're viewed as absolutely red hot. The Middle East countries, the governments want to diversify out of oil revenues, and therefore there's significant investment into financial services. In Dubai specifically, they're aiming for populist growth of from 3.5 million to 6 million over the next 10 years. And therefore there's a lot of investment into infrastructure and sort of investment into infrastructure banking, and of course that is going to create kind of the need for people over the next 10 years. And it's not just about Dubai. There's also Saudi as well. It's widely documented that the kingdom has a 2030 vision as well. It's opening up to tourism and also to foreign talent, as well. Particularly in financial services, it's viewed as a very interesting proposition. So look, it's when we speak to organizations in the region there, they're describing the market as being red hot, and there's definitely opportunity, that's there. And then outside of that, as well, we're also seeing, kind of the growth in India in banking, which has just been phenomenal. And then lastly, Japan. As well. So it's had more IPOs than all of China for the first time in decades during 2023, which is really interesting. Now, I wouldn't necessarily describe Japan as an emerging market, but it's a massive financial services center, and again, if the IPO activity is there, that's going to fuel the demand for people.
No, I agree. I was in. So we have part of the program here is we have study trips across our different programs. And we were in Dubai about 2 weeks ago with 30 students, and there were probably half a dozen students that were on campus a year ago that started with consulting or banking firms directly into Dubai, and that's having no knowledge of Arabic, not having any kind of familial ties with the region, because there is a surge in demand for talent, both through Dubai, and some of that pool is coming from Saudi as well. So I'm curious, Raphael, since you're doing asset management, you did it in Singapore, now you're in Hong Kong. What are some differences, maybe professionally and personally, that you've noticed or you've observed between the two markets?
Yeah, sure. So I would say between Singapore and Hong Kong, I haven't really noticed how much difference from a entry level. So I would say Singapore, Hong Kong, but also Shanghai. These are really centers which remain very attractive for finance professionals. I think it's evident that Hong Kong is becoming more and more integrated within China. But that being said, it does remain a very large center for hedge funds as well as wealth management. while Singapore, it has benefited from COVID. It's also been benefiting from the global geopolitical environment. But as a result, it is becoming a bit of a expensive place for young finance professionals. So especially during the last year I spent in Singapore, you had a very large influx of foreign talent into Singapore. So it is a observation that I noticed that Singapore did become increasingly expensive. But I think increasingly we are seeing the flow somewhat equalize. The outlook for Hong Kong as well as Singapore, as we've been mentioning, it's likely here to stay, and it does remain quite strong in the future. As Ben was mentioning, Shanghai is also very exciting, especially for students who are keen to understand and commit to China as a domestic market. While other Asian markets such as Tokyo, this also remains a very important financial center. The Japanese economy and the stock market have really shown some great momentum over the past year.
Right, right. Okay, another question that's come up, and this comes up continuously with students. So the question is this, and it'd be interesting to hear everyone's perspective. Is it necessary to start out? So a lot of people have an interest, for those of you that are on the call, a lot of people that go into financial services, the market is divided into two, the buy side and the sell side. The sell side, think of it as agents. Okay, you're working for clients, and you're not putting capital to work necessarily. You're more of an advisory role. The buy side, you're a principal, so you're allocating capital. So traditionally in the past, the route to the buy side was to join a sell side bank, to join an investment bank, become an advisor, hone your skill set, and then move into the buy side. So for instance, start in investment banking, move to private equity, start in equity research, move to a hedge fund. Increasingly, because of the size and the growth behind the industry, you're starting to see students come out of programs with opportunities to short circuit that track and go right into the buy side. What are your thoughts on not going sell side first and going to the buy side directly if you have it? Maybe Fabian, let's hear from you. I know we've had this discussion in the past over.
We did. Absolutely. It's a key question. As Rick mentioned, the trend has started to change where you increasingly see students out of college joining buy side. But there is a key element, and I'm also concerned by this fact. I started by the buy side and went to the sell side, which is a bit of an inverse track. And I made this decision to learn the fundamentals. I do believe that starting a career on the sell side can be challenging, and it might be more exciting and attractive out of college to join one of those top PE firms or be it a hedge fund. But joining the sell side to start your career really offers you strong fundamentals. You learn a very strong set of skills, be it ability to work hard, your attention to detail, your ability to deliver to multiple stakeholders, ability to have conversations with clients, defend a point with clients, build an investment thesis. Those are points that are key if you aim to join a flagship private equity firm or a flagship buy-side firm in general. And generally, the best way to learn those skills is to go through the investment banking route. And I've learned a ton by going on sell side. I really don't regret this choice. I think that it's the best way to learn at a very fast pace. And another point I would add, it's also important to realize that there are a lot of opportunities in the financial sector, but we are as well more and more talents looking to join the financial sector. So it results in a very competitive environment to join some of the top buy-side firms. And to prepare you for that, not only do you need to differentiate through doing one of the top degrees, education degrees globally, but you also need to differentiate yourself with a strong professional experience. And when you are junior, it tends to be more recognized to have that investment banking experience before joining one of those top tier sell side buy side firm.
Raphael?
Yeah, sure. So I would agree that going through the traditional investment bank summer internship track, it really does provide a great platform to begin a career. So often these banks will offer you a structured training program. It provides an opportunity to interact with peers at your level. But at the same time, I do think that graduates don't have to confine themselves to these areas. They can also look at private markets. We have areas which are increasingly popular, such as private debt and venture capital. Within wealth management, we see that there's a strong demand for new graduates from family offices as well as digital platforms. And we also have niche areas like token asset platforms, jobs related to ESG financing, which going forward, the trend will likely remain and jobs here will be in high demand. So often for these areas, there is a hiring process which isn't as structured at the entry level. Jobs here are often gained more through networking, but they do require skills which are more specialized. You do have the opportunity to be part of a smaller team when you start, so this can be quite helpful. And it does require a more hands-on approach with less guidance. So you do have to be quite proactive. So my recommendation is of course to opt for the traditional route, as the experience you get through a summer internship program can be really valuable. But I think it does depend person by person. It depends on the opportunities which are available. And if you go directly to another industry, you still have the opportunity to find something very challenging and fulfilling as well.
Thank you. Ben, you had a slide in your deck that showed salaries in financial services. And one of the things that I thought was interesting, going into a hedge fund, venture capital, private equity, it's almost like saying you want to be an actor. Most of the people that you read about are at the top of their game, but there are a lot of funds, hedge funds, venture capital funds, private equity funds, and they don't get to that second fund. They blow up or they move sideways. So again, I'm going to echo what Fabian and Raphael have said. And by the way, I didn't mention this earlier, but I've been a professor for a year and a half. Prior to that, I was in investment banking. So I was in New York with Merrill Lynch. I started off at a firm called Donaldson, Lufkin and Jenrette. You've read a book called Monkey Business. That's the firm. And then I was at Merrill Lynch and I was at Deutsche Bank. So I know the industry very well. And again, I would side with them and I would say, if you want to be good at it, build your craft and your skill set at an investment bank. You're going to have probably more deal philosophy. It's velocity. You can tap into a larger brain trust. And you're going to learn, this is going to sound silly to some of you, but you're going to learn a certain work ethic that you probably haven't experienced yet. You're going to learn how to grind, and why attention to detail is important. And then you're going to have that skill set. And then when you want to move to the buy side, I think a completely different set of buy side firms are going to look at you versus the ones that are going to look at you coming out coming out of school. So anyway, Ben, maybe you can, if you look at this, you can see M&A, you can see a lot of the silos in finance. And if you look at private equity on an average, 2023 expected total comp, Ben, why don't you walk the folks through these numbers?
Yeah, look, I can. I think that the pretty kind of self-explanatory, just in terms of the order. Is there any sort of specifics that you were looking for, Rick?
Well, I mean, if you look at hedge funds, I mean, hedge funds is a high one, but if you look at macro credit, sales and trading, M&A, equity sales and trading, those sound like sell side functions, right? Sales and trading. Capital markets, where if you look at private equity, that's kind of coming in under 4. We don't have venture capital here, but that tends to be a very binary outcome. But I would, when you're young, you want to learn as much as you can, and I think it's going to set you up better. It's going to give you more optionality to go to the buy side.
Yeah. So we'd look. I mean, just to add to that, we'd massively agree, and I think there's a temptation to even go into kind of niche areas. When you're starting out and you're at the beginning of your career. And let's be honest, there are some really interesting areas, to pursue. But then kind of long term, is that going to hamper you? Is that going to restrict you if you don't have those fundamentals that are in place? Are you better to kind of go sell side, and get the fundamentals around modeling and valuation skills, so you can progress into the buy side without missing those fundamentals? I think that is really key. So yeah, I mean, I just echo, I guess, what Fabian was saying earlier, really.
Okay, good. Well, I'd like to, we're probably have another 10 minutes or so, but I'd like for Raphael and Fabian, maybe we can start with Raphael, talk a little bit about your experience at ESSEC, about the Master in Finance program, how it prepared you. How do you feel like it potentially maybe set you up for success in finding the job that you wanted in the place that you wanted?
Yeah, sure. So the academic courses within the program, I found that they provide a very good mix of academic training versus practical experience sharing. So many of the teachers in the program, such as Rick, that they're actual or former industry practitioners, and they're really able to share hands-on advice. So whether you're taking the corporate finance, the markets, or the fintech track, there really is a balance between theory and academic oriented classes versus practical group studies. And also you do have some tech related courses or electives which do complement the experience. So for example, I recall that I took classes on VBA, Excel, as well as Python. But besides the academic courses, the program also invited professionals from companies across Singapore and across the rest of Asia to come and present to our class. And this is something which I found really helpful. So there was a very good mix of senior professionals from investment banking, asset management to VC, as well as consulting. And when I was attending, we did have some senior management from major institutions come and speak to our class. And typically, these senior professionals are always very keen to share their experience, to provide insight on industry trends. And they often have time after that sharing session to network with students. And I would say that this is something which ESSEC really does also try to instill into the students, the importance of networking, and having a lot of these sessions with professionals. It does really provide an opportunity to hone the skill. And certainly, as I've been progressing within my finance career, it is a skill that that I still do rely upon a lot, and I think it's very important to develop a sense early on.
Fabian.
Absolutely. Not to repeat what Raphael just mentioned, but the curriculum is very complete. That you come from a finance background or non-finance background, my batch was composed of a very diversified mix. We had people from engineering, arts, history, very different backgrounds, and everyone was learning the same thing. So not only will you be surrounded by people who already have a finance background and can help you through the program, but the course curriculum will also be very sufficient for your learning and to prepare you to go on the job market. I would also add on a few points more related to the Singapore campus. I did my full 2 years in Singapore, did not go to the Sergi campus. And my family being based in France, being in Singapore really taught a lot of independence. And I think that's a strong skill that is fundamental in your preparation as a new joiner to the professional world after a year or two of studies, learning that independence, going to networking events organized by ESSEC, having those trips and really being almost by yourself, immersed in a foreign country, was something that tremendously motivated me to have success and build a career in Asia. And I think that's something really unique to ESSEC, where you have this opportunity to spend a year or more on the Singapore campus abroad, be independent and learn skills, fundamental skills on the campus. The ESSEC also provides you with all the resources that you need to find a job. You have plenty of networking events. You have trips to big financial hubs to meet people and really network. And networking is a key skill that you need to master in finance to find a job, especially abroad. That's something I can't stop emphasizing on. Meeting people is really one of the best ways to find a job in a competitive bank or private equity firm. And last point I would mention specific to the Singapore campus, I really felt like the experience offered a lot of flexibility. And by that, I was able to build the finance club in the Singapore campus, which wasn't existing before. And this experience is offered to any students who can join. You really have a capability to innovate and contribute to the student life by building something. And not only will you learn through that experience, but you can also differentiate yourself against another candidate in an interview process by mentioning how you significantly contributed to improving the experience of other students on the campus, be it by building a club or other activities. The campus in Singapore is really flexible on those innovation, and it's very beneficial, very, very beneficial for your experience.
Okay, fantastic. We're approaching the hour. Let me ask each one of our panelists for a very short snippet of advice for pursuing a career or starting a career, let's say that, starting a career in finance in Asia. We'll go in alphabetical order. Raphael, last name Alpha.
Yeah, sure. So I'll try to keep it very short. So I think when pursuing a career in finance, my advice for students would be to look beyond just the pay element. So of course, we focused on the pay element today. I'm not gonna lie that it's very important, but also you do really need to try to find a company where you enjoy working, as typically, especially when you start your career, you do need to commit to long hours and hard work. So students should really try to ensure that they have a good fit with the managers that they will work with, as they will be the mentors for the first part of their career. So in my own experience, I can share that I was very fortunate to have managers who took the time to mentor me and help develop my career. But I think partly as well. During the interview process, I did have the opportunity to be interviewed by the managers that I would go on to work with. So I would stress that this is really important, that when you start your career, you need to find an environment where you can develop and learn. And eventually this environment will accept to give you more responsibilities as you progress through your career in finance. So as I mentioned, pay is of course very important, and it should be very important, but you also do need to spend a lot of time making sure that the fit is right.
Okay. Fabian, 60 seconds.
Right. Need to be quick. I won't emphasize more on that, but networking, and not only networking to find a job, but really getting interested in people. Don't hesitate to go on your LinkedIn and send messages to some people who you want to learn from, ask them questions about their experiences, and learn about the industry before going in there to see if it's a fit for yourself before eventually going in something that you might not like. So network, meet people, and gain insights into the firms and the sectors.
Ben.
Yeah, look, I think they're really good points, by the way. And one of the things that I thought about earlier was, to echo Fabian, network. This is Asia, and it works very differently from Europe. It works very differently from the US. It's so important. So yeah, look, I know we're short of time, but yeah, I just can't emphasize that enough. It is so important. And then in addition, just think about as well diversifying your approach. Think about LinkedIn, but think about eFinancialCareers. We're a specialist site. We'll provide some good insight. Hopefully, we've got some great opportunities that are on there. Think about kind of developing your network. And again, yes, I totally agree with Fabian. Just learn.
Okay, great. Well, thanks very much, everyone, for zooming in and being here. I'm going to put a challenge out to you. If you are in Singapore and you're interested in coming to the campus, you are welcome to contact me. You can sit in one of my classes if you want to get a feel for the experience. I think it's a big decision. It's a huge opportunity cost. I think it's worth it. I did a postgraduate program. It worked out for me, but yeah, don't be shy. Thank you very much. Thank you, Ben, Fabian, Raphael. Appreciate your time and input, and good luck to everyone. Have a good evening or good morning, wherever you are.
Thanks, guys.
Thank you.
Thanks, guys. Bye.